peoples. So overnight was a little interesting, particularly out of Canada, where there seems to be a shift in the way the market's looking at this. I guess brought on by Canada's move on interest rates, which was expected to be 0.75 basis points, but came in at 50. And the Bank of Canada is suggesting that the economy is slowing down faster than anticipated or desired. So market was looking for interest rates to be up at 4% and got to 3.75. And that seems to be the theme across the global rates, where it may not be higher, but there's a lot of talk at the moment now is that interest rates will be remain high, but not higher, but remain high for longer. And so you get that sort of period there until we see the interest rates have take a while to filter through to the economy, and there's a lot of lagging effects of rising interest rates. So if you raise them too fast, I guess the market, by the time those effects come into the market, you won't know where you're at, and so therefore you get that hard landing. Whereas if you pause here at around 3.5%, 4%, and wait for a number of months to see that filter through, whether or not you then have to raise rates because inflation's not coming down, kick rates higher again, or go, okay, well, we can see that inflation's slowly dissipating, let's leave rates here for some time before we need to kickstart the economy again. So that's the kind of the thought process. Other news was Facebook just now, after the market, the tech stocks were wrecked overnight, but just after the market, the Facebook announcement, they beat the revenue, but their earnings per share was a disappointment. So market initially liked it, but then failed. So that's Facebook there. But it was really brought on by Google and Microsoft earlier on, this time yesterday. So techs are not doing that well, although cryptos are. So we're going to have a look at the crypto 10 index, starting to sort of break out of that downtrend. Bitcoin and Ethereum certainly having a pretty good couple of sessions. But stocks in general, I prefer to look at the US 500. It's a far more broader index, and therefore a more true showing of where the economy, where the stock market should be, rather than just the tech-heavy Nasdaq and the Dow, which is pretty much tech-heavy now too, because it's Dow is just the top 30 stocks in the US, and that happens to be Amazon, Apple, and Alphabet. So they're all in there. So it's 20 years ago the Dow was Honeywell, Caterpillar, Boeing, those kind of and banks, and now it's just all quite tech heavy. And so we look at the 500, and it's doing reasonably well compared to the Nasdaq. So could go anywhere from here. I guess that's not really a committed statement, but what I'm looking at is in terms of the currencies, we've now got this uptrend happening, and we'll be sort of doing this direction. Worst case scenario is it's going to be trading sideways on the euro, but we've certainly got this kind of channel that it should work through, or worst case scenario it'll just trade around that parity for a period of time until we know what the Fed are doing. But more importantly, and closer to time, is this evening's ECB meeting, and what will they be doing with interest rates, particularly after the Bank of Canada last night. The other factor that you've got to put in is that they're looking again. They're also looking for 75 basis points, The other factor that you've got to, there's rumours that Bank of Japan and Bank of England have been calling the Fed to intervene on the US dollar because it's hurting their economies too much. And if the US want assistance in curtailing Russia with sanctions, they need to help out these economies, and euro would be as a part of those negotiations. So, I do expect the US dollar, as stocks continue to rally and as interest rates are maybe starting to have found a ceiling, that the US dollar bid, which has been in there for 2 years now almost, will dissipate, and we have a lower low and a lower highs. So again, you're getting that sort of a downtrend now. In the commodity markets, commodities did reasonably well overnight. Copper's up, natural gas up smalls. Oil is strengthening, gold up a little bit, wheat, and so the index is also up, and that will support commodity currencies. I don't think we need to be jumping on buy Aussie dollar on the back of that just yet. There's a lot of headwinds for Australia. We had our inflation last night or yesterday, 7.3%, which is a lot higher than anyone was expecting. I don't know why they weren't expecting it to be a small print. The market was expecting 1.6 for the quarter, and we got 1.8. I think 1.6 was being generous. Should have been looking at maybe 2. Anyway, 7.3%. And what will the RBA do? Will they keep rates or slow them down like the Bank of Canada? That'll be some time away yet. Not next week. Maybe it will be next week. First Tuesday of the month is 1st of November. So next week should be FOMC on Thursday and RBA on Tuesday. Yeah, so a good week next week. As the Northern Hemisphere goes into daylight savings, well, Europe anyway. BOE next week as well. So fun times next week, and for the rest of this week, we've got the ECB tonight and the BOJ tomorrow. So fun times as we roll into a recession. Enjoy, guys. Chat again soon.